Bitcoin just rocketed past $72,000 and triggered the biggest short squeeze in its entire history. Over $3 billion in short positions incinerated, more than $1 billion of that in a single hour. And it just closed above its 200-day moving average for the first time since last November, the line that marked the end of every bear market it's ever had. So is this it? Is the bull market finally back? Or is this the fake out that punishes everyone who chases it? Because the trigger wasn't a Bitcoin story at all. It was the US Treasury, and that intervention already failed. And this morning, the Treasury Secretary told the world he has to make it bigger. This is Truth Block. I'm Hurley. Let's mine truth. On Monday, right here on the show, I showed you Bitcoin coiled into the tightest trading range in its entire history, with leverage stacked on both sides. And I told you a spring wound that tight never stays still for long. Well, that didn't take long. But to understand what broke it, you have to stop looking at the Bitcoin chart. The story starts in the bond market. On Tuesday, the interest rate on 30-year US government debt topped 5.33%, the highest in 19 years. That's what it now costs America to borrow for 30 years, and it hasn't been that expensive since 2009. And that number terrifies Washington. Now, with over $40 trillion in debt, every new dollar America borrows just got more expensive. And a rate that keeps climbing is the one thing the system can't survive. So on Wednesday morning at 8:15, the Treasury put out a press release. They are at least doubling their own bond buybacks, from $2 billion per operation to at least $4 billion. And they called it, quote, liquidity support. Here's what a buyback actually is in plain English. The government sells bonds to raise money, and those bonds trade on an open market. Lately, nobody wants the long-dated ones. So the government walks in and buys its own bonds back, which creates a buyer where there wasn't one and pushes the rate down. And the new money for it comes from selling more short-term debt. They're borrowing at the front end to prop up the back end. In short, the government has become its own customer. And the reaction was instant. Yields dropped, the dollar fell to its lowest since May, gold ripped to its highest since June, and Bitcoin went from 65K to over 69K in roughly 40 minutes, including a $2,000 jump in a single minute. And that's when the shorts started getting wrecked. Over 2 days, more than $3 billion in short positions got wiped out across all of crypto. Roughly $1.8 billion of that was Bitcoin shorts alone. $1.4 billion yesterday and another $400 million so far today, because it's still going as I record. But the number that tells the real story is this. Across the same 24-hour window, long positions lost $263 million. Shorts got destroyed 11-1 against longs. That's not a market that was positioned for this. That's a market leaning entirely one direction that got obliterated. Then yesterday evening, Bitcoin got a second push from a different direction entirely. Trump walked out of a White House meeting with crypto executives, and a reporter asked him the question this space has been waiting 2 years on.
Does the administration have any plans to accumulate sizable amounts of Bitcoin or other cryptocurrencies?
Well, it's been talked about. I think I'd probably rely on Paul and the whole group for that. He'll make a decision. You guys will make a decision, and you'll let me know. But certainly it's been talked about. It's taken a lot of pressure off the dollar. It's been very, very good for the dollar. And I think if you came in with recommendations, two of you, if you came in with some recommendations, I would certainly listen. It seems to be a pretty big subject.
Trump's response was about as non-committal as it gets, and it still moved billions of dollars. But he did say one thing that mattered. Crypto, in his words, has taken a lot of pressure off the dollar. It's been very, very good for the dollar, he says. Hold on to that, because we'll come back to it in a second. So the Treasury stepped in, yields fell, and Bitcoin exploded. So the intervention worked, right? No, it didn't. At 8:15 Wednesday morning, the 10-year sat at 4.68%. On the announcement, it dropped to 4.63. Exactly 24 hours later, it shot up above 4.7, higher than before they ever intervened. And the 30-year gave back its entire decline. Saifedean Ammous called it 3 hours in. The bond market wasn't impressed, barely moving 3 basis points. And James Lavish said it best this morning. Bond market to Scott Bessent, you're going to need a bigger boat. And that's exactly what happened next. Hours after the bond market handed back every basis point, Bessent went on CNBC and said, quote, "We're going to increase the size of the buyback."
We routinely do buybacks, and we're going to increase the size of the buyback. And, Sarah, I would note that it could be more than the $4 billion per issue.
Just think about that for a second. He intervened on Wednesday, it failed by Thursday morning, and by Thursday afternoon, he's on CNBC admitting the money was never really the point. The point is making you believe he'll always be there. What we watched in the last 48 hours was the first rung of a ladder. 2 billion wasn't enough, 4 billion wasn't enough. Now it's more than 4 billion with no number attached and no ceiling named. The Kobisi letter called it a band-aid on a gushing wound, and that's exactly what it is. Because the interest bill goes up, the deficit goes up, so they borrow more, which means more supply, fewer buyers, and higher rates all over again. And that loop has no exit door. It only has a printer at the end of it, which is why I'd be very careful about selling Bitcoin into this move. The lesson of the last 48 hours is that Washington will keep creating dollars to defend its own bond market. So the last thing you want to do is sell the scarcest thing you own to raise the exact dollars they just promised to make more of. And that's why this show is sponsored by Ledn. When life demands dollars, say it's a tax bill, a repair, a business expense, you don't have to touch your stack. Ledn lets you borrow up to 50% of your Bitcoin's value, funded to your bank account in under 6 hours, with no credit check, no capital gains event, at roughly half the rate of a credit card. With Ledn, your Bitcoin stays in secure custody and is never lent out. And Ledn has originated over $11 billion in loans since 2018 without ever losing a single Satoshi of client funds. So head to learn.ledn.io/simply to learn more. Now the obvious question. $4 billion against $40 trillion in debt is a rounding error. 1/100th of 1%. So why did the hardest asset on earth move 10% on a rounding error? Because the market wasn't pricing the size, it was pricing the signal. For the first time, the fiscal authority stepped in to defend the long end. Not the Federal Reserve, the Treasury. And they did it within 24 hours of the highs, which told every trader on earth exactly where the pain threshold sits. Raoul Pal named it that same morning, the Bessent put. In his words, the extra dollars are small, but the signal is enormous. Jeff Ross put it another way. The Fed put has officially been replaced with the Treasury twist. And Bitcoin figured that out immediately. Now back to what Trump let slip. Because in that same CNBC interview, Bessent said one more thing. There's a very good chance, he said, that we may have seen a peak in the fiscal deficit. Luke Groman's reply is the best thing I've read all day. Sure, that could prove 100% accurate. If he swaps all the federal debt for short-term T-bills, then uses those T-bills to back 0% yielding stablecoins, then cuts the rate on those T-bills to 0.6%. That's the entire plan in one sentence. Refinance the national debt into short-term paper. Then manufacture a captive buyer for that paper by requiring every regulated stablecoin on earth to hold it. That's why the president thinks crypto has been very, very good for the dollar. It's the pipeline. And then Groman adds the part that matters. You're going to want to own more gold and Bitcoin, which is exactly where James Thorne landed this week. Washington can regulate the perimeter of crypto. It can't manufacture Bitcoin's scarcity. Every tool on that table manages how the debt problem looks. Not one retires a single dollar of it. And there's exactly one asset on earth those tools can't reach. Lynn Alden went on CNBC Live this morning and was asked about the violent move and the record liquidations. Listen for the words she uses for what the Treasury and the Fed are about to do to your money.
Yeah, so Bitcoin, I mean, the sentiment's been very low. The fast money has long since moved out toward AI names. And as we saw, I mean, even a fairly small move in price and in Bitcoin terms caused kind of record liquidations, which shows just how bearish the sentiment and positioning was. I think that, while this could be another false breakout. I mean, May, we saw higher numbers and we rolled back over to slightly lower lows than we saw in February. So I don't think Bitcoin's out of the woods yet, but I do think that by almost every metric, Bitcoin is near the low end of its valuation and sentiment range. Fast money's washed out. Strategy already kind of recapitalized its dollar position, so it kind of took that overhang of potential kind of further selling off the market for a while. There's really not a lot of downside catalysts for Bitcoin left. And even relatively small upside gains at this point can attract new types of buyers. Once people see that the chart doesn't look bad anymore, you can get technical traders coming back in. If you get further momentum, say months from now, you could get more momentum traders back in. So I think, with a multi-year time frame, Bitcoin is positioned here, both just fundamentally from where money has gone, but also from the dynamics we just talked about, basically that they're going to do some version of financial repression between the Treasury and the Fed, potentially alternating, and the ultimate beneficiary of that is hard assets that are underowned.
She said this could be another false breakout, and she's right. Anyone telling you today that $72,000 guarantees anything isn't being honest. But listen to what she slipped in at the end. Some version of financial repression between the Treasury and the Fed, potentially alternating. She's describing that as something coming. We just watched the first alternation land on Wednesday morning. So what's actually different underneath the price? This is the part nobody covering today's green candle is going to show you. Start with the floor, because it was never a chart pattern. Alex Thorne published the data this morning. More Bitcoin change hands between $62,000 and $65,000 than in any other price band in history, with one exception: the very first band under $1,200. 7 months of everybody saying nothing was happening was the biggest ownership handoff at that price Bitcoin has ever recorded, and every one of those coins now sits underneath us. Then we have the 200-day moving average, which was reclaimed for the first time since November of 2025. But the detail that got my attention is this: the 200-day moving average sits at roughly $69,000, and Bitcoin's all-time high from November of 2021 was roughly $69,000. So that's two unrelated lines, one drawn by a moving average and one drawn by the top of an entire cycle, landing on the same number. And Bitcoin took them both out in a single candle yesterday. And that points to something Bitcoin does every cycle. It comes back to the previous cycle's all-time high, the price that used to be the ceiling, and then turns it into the floor. The 2017 top near $20,000 became the base Bitcoin built through 2022 and 2023. The 2021 top near $69K became this year's base at $60 to $65K. Run that forward, and this cycle's top near $125K becomes the floor of the next bear market. Now, that's 3 observations and a pattern, not a promise. But sit with what that would mean. The bottom of the next bear market would be higher than the all-time high most of you are waiting to get back to. And that's just Bitcoin doing Bitcoin things. And the people who built that floor at 62K aren't the ones who sell this, because they're holding their own coins, not somebody else's paper. And that's why this show is sponsored by Bitkey. Bitkey is self-custody without the single point of failure. It's multi-sig by default, where you need 2 of 3 keys to move your funds: your phone, the hardware device, and a recovery key. With Bitkey, there's no seed phrase to hide, protect, or lose, and recovery and inheritance are built right in. The new Bitkey even has a screen, so you verify every transaction on the device itself, instead of trusting your phone. Visit bitkey.world/truth and use the promo code TRUTH for 10% off the new Bitkey. So let's zoom out for a second, because I know what a lot of you are thinking right now. Did I just miss the bottom? Matt Cole at Strive published a chart this morning of the buyback. The dollar index has made lower major highs for 45 years. Every Bitcoin bull market in history ran alongside a temporary dollar decline, and Bitcoin has never once lived through a real structural decline. Cole's summary was blunt: you are not bullish enough. Now let's put a number on it. Bitcoin at 72K is worth about $1.4 trillion. Gold is worth roughly $30 trillion. That's about 20 times. Priced against gold directly, 1 Bitcoin buys 16 ounces today. Still nowhere near where it sat last October. An asset that has to go up 20 times just to catch the older, heavier, worse version of hard money is not an asset you missed by 10%. But that runway could take years to run. And everything then comes down to one thing: still owning these coins when it gets there. Years is a long time to hold something. Long enough to lose a device, get phished, or leave your family locked out of the most valuable thing you own. That's why this show is sponsored by the Bitcoin Way. The Bitcoin Way offers one-on-one white glove counsel from real human Bitcoin experts. Anything from your self-custody setup, to running your own node, to locking down your security, and even inheritance planning so the people you love can actually receive what you built. The Bitcoin Way will walk you through all of it at your own pace, and there's no question too basic for them. If this week made you realize your setup isn't where it should be, this is the call to make. Visit thebitcoinway.com/Hurley, and your first 30-minute consultation is completely free. Jeff Booth wrote one of my favorite books of the last 10 years, The Price of Tomorrow. He's not a hype guy, and he didn't arrive at Bitcoin easily. He says he spent 15,000 hours trying to prove it wouldn't work.
But as I started to do more work, and I spent about 15,000 hours trying to say, how do I kill Bitcoin? What does that look like? Because I realized if we've never lived in a free market, then it's not somebody else, it's us taking this short-term choice, telling us, well, I'll just make a little bit more against the other person and everything else and consolidate. And that would happen again and again and again. And it does happen again and again and again throughout history. And could Bitcoin actually resolve that problem? Could it actually stay decentralized and secure? And as I ran a node and I said, my vote counts in keeping this decentralized and secure. And as I moved more of my time into that system, and I saw the explosion of innovation of the free market building on top of Bitcoin like a protocol and building more and more value, I saw something very different than most people see. I saw this thing emerging in a decentralized, secure way, that it didn't care about what people thought of it. It just, every 10 minutes, there was a new block bounded by energy, decentralized and secure, and it would emerge exactly like the internet because of that. Would it be attacked everywhere? Of course it would be. Because if that premise held, the entire system would be repriced by it. And you would live in abundance. You would live in abundance because you were you were at the front edge of the first free market that ever existed, and you were a part of it.
What Booth found at the end of 15,000 hours wasn't a trade or a price target. It was a block every 10 minutes that doesn't care what any of us think. And that was just as true at $58,000 in June as it is at $72,000 today. The block didn't know about the squeeze. It didn't know about the press release. It just kept going. And Booth's other line ties this whole week together. Abundance in money creates scarcity everywhere. Scarcity in money creates abundance. Because look at what the Treasury did this week. By stepping in at 5.33%, they published a number. They told the world the exact borrowing cost the system can no longer tolerate. Now everybody knows it, and they have to defend that line forever, with a bigger number every time. And think about what sits on top of that line. Every asset on Earth is priced off the long bond. Your mortgage, your company's stock, the value of every dollar in your bank account. If the long bond has a manager now, then every price on your screen is a managed price. Every price except one. Bitcoin is the only number on any screen with nobody standing behind it. No buyer of last resort, no toolkit, nobody to call at 8:15 in the morning when it goes the wrong way, which is exactly why it moved first this week, and moved hardest. So every explanation you'll read tonight about why Bitcoin went up is being written right now, after the fact, and almost all of them will be wrong. Bitcoin went up because it is absolutely scarce, and it's being measured against a ruler with no limit. And this week, the man holding that ruler went on CNBC and told you the number has to get bigger. But now I want to hear from you. Is this the breakout or the fake out that traps everyone chasing the candle? The Treasury spent $4 billion and the bond market handed it all back in 24 hours. So how big does the next one have to be? And what do you think the next cycle's floor price will be? Drop your thoughts in the comments below. If this gave you signal, don't forget to hit like, share it with a friend who just texted you asking you if it's too late, and subscribe to Simply Bitcoin for more analysis every single day. I'm Hurley. This is Truth Block. Thanks for hanging out. I'll see you next week.